Hello traders, you're welcome to this video and you are welcome back to the Forex Geek channel. Okay, if you are new to trading or you have maybe a little bit of an experience, then you are going to find this channel very useful because we provide a lot of information that can aid you, okay, in your Forex trading journey. All right, so if you're not yet subscribed to the channel, you might want to do that now because we provide a lot of insightful information in this channel. Okay, now in this video we are going to be looking at the stochastic indicator. Okay, specifically we will be talking about the best stochastic settings for day trading. All right, so if you are a day trader, then you might want to stick around till the end of this video. Okay, we're also going to be looking at how you can use the stochastic oscillator to time your market entries or to improve your timing and your market entries. Okay, so by the end of this video you'll have a clear understanding of the best settings to use, how to tweak them for your trading style, and how to make better decisions using this indicator. All right, but before we get started, if you are new here, make sure you hit that like button and subscribe so you never miss out on valuable trading content. All right, so let us jump right in. I'm just going to be adding the stochastic oscillator to the chart right away, and here we go. So let us first break down what the stochastic indicator actually is. Okay, for those of you who might be new to this concept, the stochastic is a momentum oscillator that compares a specific closing price to a range of prices over a set period of time. All right, it was developed by George C. Lane in the 1950s, and it has since become one of the most popular indicators used in technical analysis for spotting potential trend reversals. All right, the idea behind the stochastic is simple. When the market is overbought or oversold, the stochastic can help you identify when a reversal is likely to happen. It's calculated by looking at the current closing price relative to the high-low range over a certain period, okay, which gives you a value between 0 and 100, as we can see right here. Now, why is the stochastic indicator so crucial for day trading? Well, day trading is all about capturing short-term price movements, and the stochastic oscillator helps you do just that. Now, unlike long-term indicators like moving averages, the stochastic oscillator is designed to provide signals on shorter time frames, perfect for making quick decisions in the fast-paced world of day trading. All right. Now, the stochastic oscillator can tell you when the market is likely to be overbought. That is when the value is above 80, or when the market is likely to be oversold when the value is below 20. All right. It helps you to spot potential reversal points. Now, this is especially useful in range-bound markets or when you are trading in choppy conditions, which are common during the day. Okay, but as you probably know, it's not enough to use just the stochastic oscillator. Okay, it's all about setting it up correctly for the best results. Okay, so let us get into the meat of today's topic, the best stochastic settings for day trading. There isn't one perfect set of settings that works for everyone. Okay, it's very important for you to know that, but there are optimal values that can help you make better decisions faster. So the most common, okay, one of the common default settings for the stochastic oscillator is a 5% K period, 3% D period, and 3 slowing. You can see I reset it. This is the default settings. All right. But for day trading, you will often want to adjust these values to fit the shorter time frame you are trading on. Okay. So here's a breakdown. Now for the percentage K setting, this is the main line. Okay, the percentage K is the main line, which is the light green colored line here, as we can see. The main line is the light sea green colored line. Okay, that's the percentage K. All right. For day trading, I recommend using a period of 5 or 9. All right, so we're just going to be using 9, okay, for this video. Now, this gives you, quite, effective signals, although it does not guarantee profits, all right? But the signals are quite effective and it can be essential when you are looking for fast market movements. As for the percentage D settings, a 3 period, yeah, a 3 period is commonly used, but you can experiment with a 2 period for faster signals in high volatility markets. So we're just going to be changing this to a 2. All right. As for the overbought and oversold levels, the standard overbought level is set at 80 and oversold is set at 20. However, depending on the market conditions, you might want to adjust this level slightly. For instance, if you are trading a trending market, you could raise the overbought level to 85. All right. Okay. And the oversold level, you could push it down to 15. Okay. All right, so this is how it looks like. So to summarize, for day trading, a common setup might look like a percentage K period 9 or 5, a percentage D period 3 or 2, and overbought level 80 or 85, and oversold level 20 or 15. All right, these settings give you quicker, more responsive signals that are crucial when you are working with shorter time frames. Now that you have the right settings, let's talk about how to actually use the stochastic indicator in your day trading strategy. The first thing to remember is that the stochastic is a momentum indicator, not a trend indicator. This means it is great for spotting overbought and oversold conditions, but it doesn't tell you whether the market is in a strong uptrend or downtrend. So you need to combine it with other indicators or tools for confirmation. One popular way to use the stochastic is by looking for crossovers, whether bearish crossovers or bullish crossovers. Okay, so when the percentage K line crosses above the percentage D line, you know, and both are below the 20 level, or the 25, or the 15, sorry, the 15 level, if you are using the 15 settings, if you are using the 20 settings, when it's below the 20 level, that's often a sign that the market is oversold and a potential buy signal. Conversely, when the percentage K crosses below the percentage D line above the 80 or the 85 level, that's a typical sign that the market's overbought and a sell signal could be coming. But here's a little secret. Don't rely on the stochastic alone. Always confirm the signals with other indicators like support and resistance. It's very important. Support and resistance are always important, irrespective of the strategy you are using, because these levels, these are price sensitive levels. They can show you reversal points. Okay, potential reversal points. So these are very, very important levels on your chart. Okay, both horizontal support and resistance levels and your dynamic support and resistance levels, using trend lines. All right, they are very, very important. Okay, now remember that market conditions vary. All right, so you may need to tweak your settings a little bit depending on the asset you are trading. For instance, in fast-moving markets or during major news events, you might need to reduce the percentage K period even further to capture quicker momentum shifts. On the other hand, for slower, more stable markets, you could increase the period for more reliable signals. All right, test different settings in a demo account to find what works best for you. To wrap things up, mastering the best stochastic settings for day trading can give you an edge in spotting potential entry and exit points. By using the right period for percentage K and percentage D, along with adjusting your overbought and oversold levels based on the market conditions, you'll be able to make more informed, confident trading decisions. Don't forget to like the video if you found this helpful and subscribe to the channel for more tips and strategies to improve your trading. Also, feel free to drop a comment below with any questions you have about using the stochastic or any other trading topics you want me to cover next. Thanks for watching, and I will see you in the next video.